Let's be honest, now most of us feel a little intimidated when we hear the word investing. For most people, investing seems like a secretive, high-stakes game for experts, something reserved for people in fancy suits or those glued to financial news. But that's just a myth. The truth is, investing is much more accessible than it appears. The real reason investing feels complicated is because we're rarely taught what it actually means, either in school or at home. Hollywood gives us the drama, not the reality. Movies make it look like a roller coaster of risk and reward, but that's not the full story. At its core, investing is simple. It's about ownership. You're buying a piece of something real, whether it's a company, a building, or a project. You use your money to support real businesses, projects, and properties that make the world go round. In return, you share in their future success. When they grow, so does your investment. Think of a local baker who needs a new oven. If you help fund it, you get a share of her profits. That's investing, supporting people and ideas you believe in. The stock market is just this idea on a global scale. Millions of people helping thousands of businesses grow, innovate, and create jobs. Investing isn't about outsmarting anyone. It's about participating in the world's economic engine and being part of something bigger than yourself. Instead of letting your savings sit idle, you put them to work, helping your money grow over time. Once you see investing as owning a slice of the world's productivity, the fear fades and confidence grows. It's not a risky bet for a select few. It's a logical step for anyone wanting to build wealth. The context is everything, and understanding it changes everything. Investing is for everyone, not just the experts. It's a tool anyone can use to shape their future and take part in the world's growth. What really happens when you decide to invest your money? When you buy a share or a bond, you're not just clicking a button, you're making a real-world financial decision. Buying a share means you own a tiny piece of a company, its assets, its profits, and even its future potential. You become a part owner, sharing in both the risks and the rewards. If the company grows and succeeds, so does your share's value, and you might even receive dividends as a reward for your ownership. Buying a bond is different. Here, you're lending your money to a company or government, and in return they promise to pay you interest over time, plus your money back later. Bonds are generally less risky because you're a lender, not an owner, and you have a clearer idea of what you'll get back. Real estate is another way to invest, owning property for rental income or hoping for value growth over time, which can build wealth steadily. Shares, bonds, and real estate are all ways to put your money to work in the real world, each with its own risks and rewards. With shares, you're a part owner. With bonds, a lender. With real estate, a landlord. Each role shapes your investment journey. None of this is gambling. It's about supporting the economy, helping businesses and communities grow, and growing your money over time. Investing is grounded in real-world value, connecting your money to the engines of progress all around us. The real secret weapon in investing isn't a hot tip, it's time. Time is the one resource you can't buy more of, but you can use it to your advantage. Compounding is the magic. Your returns earn their own returns, snowballing over years. The longer you let your money work, the more powerful this effect becomes. Start early, even with small amounts, and you'll likely end up with more than someone who invests a lot later. It's not about how much you start with, but how long you let it grow. Trying to time the market, buying low, selling high, is nearly impossible, even for professionals. The market moves in unpredictable ways, and no one can consistently guess its next move. Missing just a few of the best days in the market can cut your returns in half. Those days are impossible to predict, so staying invested matters. The key is to stay invested through ups and downs. Markets will rise and fall, but your patience pays off over time. Patience, not prediction, builds wealth. Let your investments grow quietly in the background while you focus on living your life. Think of investing like planting a tree. Give it decades to grow. The biggest rewards come to those who wait. Regular, long-term investing beats chasing quick wins. Consistency is more important than perfect timing. Ignore the daily noise. Focus on the long game. News headlines come and go, but your strategy should stay steady. The discipline to stay invested is what separates successful investors from frustrated gamblers. It's about commitment, not luck. Time is your greatest advantage. Every day your money stays invested. It's working for you. Let it work for you. Trust the process and let time do the heavy lifting. That's how real wealth is built, slowly, steadily, and with patience over the years. Risk scares many people away from investing. But real investment risk isn't about temporary drops in value. That's normal. The true risk is permanent loss, like a company going bankrupt. That's why diversification, spreading your money across many investments, is crucial. Don't put all your eggs in one basket. Smart investing manages risk, it doesn't avoid it. The biggest risk is often doing nothing. Keeping all your savings in cash feels safe, but inflation quietly erodes your money's value every year. Your bank balance might not shrink, but what you can buy with it does. Avoiding market ups and downs means guaranteeing a slow loss to inflation. Investing is the only proven way to outpace inflation and grow your real wealth. The real question isn't, should I take a risk, but which risk do I choose? For long-term goals, not investing is the riskiest move of all. Successful investing isn't about genius, it's about good habits. The market rewards discipline, not brilliance. Automate your investing. Set up a monthly direct debit to your investment account. This removes emotion and helps you invest consistently, no matter what the headlines say. This strategy, called pound cost averaging, means you buy more when prices are low and less when they're high. It's a simple trick that turns market fear into your advantage. Your biggest enemy isn't the market, it's your own emotions. Build habits like automating contributions and reinvesting dividends. Consistency beats cleverness every time. Boring, disciplined investing builds real wealth. Investing is vital, but it's not the first step in your financial journey. Think of your finances like building a house. Start with a solid foundation. First, create a budget. Know what's coming in and going out. Next, clear expensive debts like credit cards. Paying them off is a guaranteed high return. Then, build an emergency fund. 3 to 6 months of living expenses in easy access savings. This protects you from life's surprises, so you don't have to sell investments in a crisis. Only after these steps should you start investing for long-term goals, like retirement. Investing is the roof on your financial house. Follow this order: budget, clear debt, emergency fund, then invest. This structure keeps your investments safe and growing. Build your financial house to last. In a world obsessed with complexity, the smartest investing strategy is often the simplest. You don't need dozens of stocks or fancy products. For most people, a few low-cost index funds or ETFs are enough. Index funds own a slice of the whole market, giving you instant diversification. They're cheap to run, easy to manage, and historically outperform most expensive funds. Simplicity means lower fees, less stress, and better results. Investing isn't about outsmarting everyone. It's about cooperating with time and discipline. Define your goals, contribute regularly, keep costs low, and diversify. Let compounding do the heavy lifting. Ignore the noise and stick to your plan. Patience and consistency are your superpowers. Building wealth is common sense, not magic.